Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this Friday. 57 members, along with the Prime Minister Narendra Modi, were sworn in at a grand ceremony last evening at the Rashtrapati Bhavan. 24 of them had a cabinet rank, while allies got 4 berths. BJP President Amit Shah makes it into the cabinet. Former Foreign Secretary S. Jaishankar is the surprise addition. Portfolio allocation is yet to be known. India's GDP growth rate may fall further in the fourth quarter. The Bloomberg poll of 42 economists pegs it at 6%. ONGC estimates in the fourth quarter ONGC came in or missed estimates in the fourth quarter as lower realization and higher employee expenses weighed on the bottom line. And Asian markets are off to a weak start after US President Donald Trump imposed tariffs of as high as 25% on Mexico for illegal immigration. Let's talk about the action on Wall Street now, where stocks rebounded from their 12-week lows on Thursday. The S&P 500 rebounded from its 200-day moving average, but is on course to post its first monthly decline this year. Renita Young of Bloomberg News sums up the trading session on Wall Street in this report.
U.S. stocks ended higher on Thursday after fluctuating for much of the session, with investors still concerned that the U.S.-China trade spat could derail global growth. We also saw some nervousness in the bonds market, a warning sign rather, flashing that there could be a possible pending recession. This happened as Treasuries resumed a risk rally, pinning yields down to 20-month lows. However, there was some positive data coming out in the form of first quarter growth, which was revised down by less than expected, showing that there was more consumption and exports than initially reported. This also meant that expansion was on pretty firm footing before U.S. President Donald Trump decided to intensify the trade war with China in early May. There is more data coming out, by the way, on Friday that should give a little bit more of a rounded out picture of where the U.S. economic picture should be. Meanwhile, we're still in the middle of corporate earnings season for retailers, with women's clothing retailer J.Jill at one point shedding about half of its value on Thursday after the company reported first quarter trailing analyst estimates on sales there. And Express is higher after reporting a favorable first quarter with sales that blew past analyst estimates. And Burlington Stores cutting its full year forecast for the year for sales, shares rising on that news. We do have others coming soon, and we'll have more information on the Gap, Costco, and Dell and Uber. That's a look at your Thursday Wall Street action. In New York City, I'm Renita Young for Bloomberg News.
All right, let's take a look at what's happening in the Asian markets. We're joined now by Sophie Kamruddin, who's joining us from the Hong Kong studios. Morning, Sophie. What's the picture that you're picking up at the end of the week?
Well, we have bearish news piling up this morning from the miss in China's manufacturing PMI data for May to U.S. President Trump's threat to impose tariffs on Mexican imports. So that is weighing on the Mexican peso this morning, which has slumped as much as 2.4% early in the Asian session, while we're seeing the yen gain ground and bonds are rallying, with 10-year U.S. Treasury yields falling below 2.2% to extend the drop at 20-month lows. We're also seeing commodities under pressure. Oil is off about 1%, while copper is continuing to fall as a deteriorating factory outlook for China also weighs. So we are seeing the Shanghai Composite open lower this morning, off 1/3%, with the index headed for the worst May since 2011. The Hang Seng also on the back foot, off 0.2%, while we're seeing the Kospi ease its earlier drop somewhat, now looking a little change, while the Korean won is under pressure as investors also have the BOK on tap today. Now, the Bank of Korea did hold on rates this morning, but markets will be watching for a dovish tilt when Governor Lee delivers the economic outlook later this morning. Now, I want to highlight Japanese stocks. They are the worst performers in the region this Friday. The TOPIX is set for the biggest monthly drop of the year. The Nikkei 225 off about 0.9%. We have electronics makers and autos sliding in Tokyo. Mazda Motor slumping as much as 9%. This as Trump's tariff threats do not bode well for car makers that have production in Mexico. Back to you.
Thanks so much for that, Sophie. Well, one of the big moves in the international markets yesterday was crude oil. Oil prices are set for their biggest monthly loss this year after lesser than expected withdrawal from U.S. inventories stoked demand concerns. You see the price at 66.25. Just yesterday, it was trending at close to $68 to a barrel. James Thornhill of Bloomberg News tells you what the latest is and what the trend going forward could be.
Put simply, it's all about demand. The demand outlook is starting to weaken. What we've seen this week, U.S. energy information showed that gasoline stockpiles are rising for the second week in a row, which is interesting in the sense that we're going into the U.S. what the U.S. calls summer driving season, which is usually a time when gasoline demand is high. So we're seeing those stockpiles rise at a time when we should be seeing seeing demand rise, which is causing concern among traders. And of course, overlaying all that, we also have the ongoing U.S.-China trade tensions and what that means for global demand going forward. So it's really all about demand at the moment rather than supply.
So what are the next catalysts now?
Well, the options market is telling us there's certainly more scope for downside, at least in the short term. The demand for protection from further falls in crude prices is currently running at its strongest since middle of December. So that would suggest that there could be further to run in this downside rally. We've had the downside move. Obviously, we've had a strong run up in the early part of the year, and to a certain extent, this is a technical correction. But as I said, there are those demand worries, and of course, the next focus for the market will be on OPEC and whether they will extend the production cuts that drove that early year rally, whether they'll extend those cuts into the second half of the year. Now, they don't seem to be able to agree on a date for the next meeting for deciding that, which doesn't exactly bode well for the cohesion for actually agreeing to extend those cuts. So we'll have to wait and see on that. Currently expecting it to be around the early July, which has been pushed back a little bit from late June. But until we get some clarity from OPEC on what they're going to do with production later in the year, I think that the market could struggle a bit.
All right, now U.S. President Donald Trump's tariff threats have found a new target, and that is Mexico. The president has decided to impose a 5% tariff on all goods from Mexico in order to curb illegal immigration on the country's southern border. Trump made these announcements overnight in a tweet. Derek Wallbank of Bloomberg News tells you what is more in that story in this report.
Well, there's an escalation clause in here, and right now the U.S. has announced a shock tariff. It really was a shock. It came like a thunderbolt a couple hours ago in a tweet from the President of the United States saying there would be a 5% tariff on all goods from Mexico starting June 10. If this is connected to immigration on the southern border, the President has for a long time been really upset about traffic coming over from the U.S. southern border with Mexico. That's what this is linked to. It's not really linked to anything else. So the move is a 5% tariff initially June 10. If whatever the U.S. wants to see Mexico do on immigration is not done, then it ratchets up, and there's a ratchet clause that starts July 1, that goes to 10%, then August 1, September 1, etc., until finally you get to 25% on October 1, and the White House says they are willing to keep tariffs at that level indefinitely until Mexico takes unspecified action to reduce undocumented migration at the U.S. southern border.
Derek, when President Trump started imposing those tariffs on Section 232, Section 301, there was a lot of talk on whether or not the president's tariff powers should be curbed. Are we going to see this debate reigniting? And just for now, do we get a sense of whether or not he has the authority to go ahead and do this?
You are peering right into my reporting notebook right now. We don't have a lot of reaction from lawmakers on Capitol Hill at this moment. Certainly, we're seeking it, as is everyone else, and we're watching for comments, particularly from Nancy Pelosi and Mitch McConnell, the Democratic and Republican leaders of the House and Senate, respectively, to see what, if anything, Congress may do in response to this. So far, Congress has had a lot of words, but not too much action for previous U.S. tariff actions, sort of across all of those lines. And Trump has been allowed to kind of do mostly whatever he wants. Now, the president has talked about escalating consequences for Mexico previously. He's been talked down from those previously. A lot of major groups that have typically been aligned with Republicans, starting from the U.S. Chamber of Commerce on down, have really warned about taking actions against Mexico and the real contagion that has for a lot of the U.S. economy, because the U.S. and Mexico, as you can imagine, are very, very, very heavy trading partners.
All right, well, let's have a look at the global headlines. Sue Keenan of Bloomberg News brings you the first word headlines.
North Korea has apparently executed its top negotiator involved in the February summit with President Trump. This according to a report in South Korea. A newspaper there says that Kim Hyok-chol, who led working-level negotiations for the summit in Hanoi, was executed in March with 4 other North Korean foreign ministry officials. The newspaper also says Kim Jong-un's top aide is doing hard labor. To the U.S. now, economic growth last quarter was revised downward by less than expected. Consumption was stronger than originally reported, and so were exports. GDP expanded at an annual rate of 3.1%. That is down 1/10 from the original report. Now, Bloomberg Intelligence says growth is increasingly dependent on consumer spending, with business confidence rattled by the current trade concerns and volatile financial markets. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, now Agam Vakil is here to tell you all about the day's trade and what's happening in the futures and options space. Agam, well, how are we looking at the end of the week? Any cues that we can take going into next week?
Well, Alex, perhaps the positive is that last week we made a lifetime high on an intraday basis, and yesterday it was a lifetime high on a closing basis. That, of course, is a very big positive. This also means that we're likely to see the week end in the green should we see the Nifty close higher in today's day of trade. SGX Nifty for now indicating some amount of marginal move, so we'll be watching out for that. But as I was suggesting, we saw advances of around nearly 1% for the Nifty 50 and the mid-cap index, small-cap index following through, and the banking indices also up and about with about 0.5% gains for both these. And ADRs for now are positive, so that, of course, can be taken as a positive sign. Dr. Reddy's, Infosys, ICICI Bank, Wipro, and well, save for Vedanta, which is marginally in the red. And moving on, we have FIIs, which are stock worth 1,665 odd crores. DIs, on the other hand, in comparison, selling stock worth around 1,100 crores. Now, we do have gains in the Nifty on the back of heavyweights like HDFC Twins, Reliance, as well as Tata Consultancy Services. But it's a new series. We're entering the June series where we expect to pick up activity, and that's the reason why there has been a surge in open interest for the June series. And the Nifty and the Bank Nifty as well has seen a 57% increase in open interest. Moving on to your open interest distribution, we are keeping an eye on the 12,000 mark, which has the most amount of open interest in calls, and 11,800 put. Then moving on, in terms of changes in open interest, again, not too surprising. It is the 11,900 mark, which is the one with the maximum, with significant changes. The VIX comes off further, now at around 15.6, a very comfortable level for those who are long in the markets. And the Nifty put call ratio is at 1.3. Moving on, we have Canfin Homes, Havells India, Container Corp, all of them seeing a surge in open interest. And of course, it's on expected lines. We can't really consider this because it was expiry, so we'll be watching out for that. So on the whole, it's been a fairly good day of trade as well as a very strong expiry too, Alex. And we'll be taking these cues away for considering today.
Also waiting for portfolio announcements, and that might have a sentimental impact, if at all, on the markets. Thanks so much for that, Agam.
Yeah.
Well, let's talk about that. Prime Minister Modi will have 24 cabinet colleagues and another 33 colleagues in the entire Council of Ministers. And that list had its share of surprises this time around, like former Foreign Secretary S. Jaishankar making it to the cabinet, and some like Jayant Sinha and Rajyavardhan Singh Rathod being left out this time around. Kaushik Vaidya sums up the key takeaways from the Prime Minister's new Council of Ministers.
Prime Minister Narendra Modi kicks off his second term with a team that's a mix of familiar faces from the first 5 years and some notable new inductees into the Union Council of Ministers. Let's start with the top 5. The Home Minister in the previous government, Rajnath Singh, was the first to be sworn in after the Prime Minister. The Defence Minister in the previous government, Nirmala Sitharaman, also retains a cabinet spot, as does Nitin Gadkari. The two new additions into the Union Council of Ministers, Amit Shah is now a cabinet minister at the union level, as is former Foreign Secretary S. Jaishankar. Remember, these two new positions have come in because Arun Jaitley and Sushma Swaraj, two senior ministers from the first Modi government, have kept ill health and probably have not been able to continue in their roles into the second Modi term. Also among the top ministers of the second Modi term, Narendra Singh Tomar, who also plays a large role in the party organization, Piyush Goyal, who twice stepped in the first term as interim finance minister, Smriti Irani, who just a couple of weeks ago defeated Rahul Gandhi in the seat of Amethi, Dharmendra Pradhan, who played the role of oil minister in the previous government, retains his cabinet spot, as does Ravi Shankar Prasad, who's now a Lok Sabha member for the first time. Key NDA allies have been given one cabinet seat each. Ramvilas Paswan is a cabinet minister from the Shiv Sena, the party that has nominated its MP for Mumbai South, Arvind Sawant. The Shiromani Akali Dal has put forth Harsimrat Kaur Badal as its minister into the union cabinet. The RPI Athawale party has put forth its party chief, Ramdas Athawale, who is now a minister of state for the second time in a Modi government. There have been notable omissions in the second coming of Prime Minister Narendra Modi's Union Council of Ministers. The Commerce Minister and the Civil Aviation Minister in his first term, Suresh Prabhu, does not find a mention in this list. Also missing are Menaka Gandhi. Manoj Sinha, who was Telecom Minister in the first term, is also left out. Rajyavardhan Singh Rathod, who played the role of INB Minister and Sports Minister, has also been left out of this Union Council of Ministers. The one name to note is JP Nadda. Among the senior-most ministers of the first Modi government is not in the second Council of Ministers. That could possibly be because once Amit Shah moves into the Union Cabinet, his role as BJP president would have to come to a close. And Mr. Nadda, who's a key functionary in the party, could potentially take the helms at the party.
Now, whoever becomes the finance minister may not be too happy with the fourth quarter GDP numbers. They may not put a smile on the face of the new finance minister, with most of the macro indicators pointing towards further moderation in growth. Pallavi Nahata sums up what we can expect this evening from the Q4 GDP numbers.
GDP growth is expected to moderate further in the January-March quarter as investment and consumption demand show signs of moderation. A Bloomberg poll of 42 economists have estimated GDP growth at 6.3% in the fourth quarter. The range of growth estimates is wide and stretches from a low of 5.7% to a high of 7%. GVA is expected to grow by 6% according to 25 economists polled. For the full financial year, GDP growth is estimated at 6.9%, a tad bit lower than 7% estimated by the CSO in the second advance estimates. Multiple high-frequency indicators such as auto sales and non-oil, non-gold imports have continued to moderate. Several consumer goods firms which have reported earnings for the fourth quarter in recent weeks spoke of weak consumer demand, particularly in rural areas where lower farm income has impacted demand. According to estimates by Axis Bank, agricultural output could contract to 0.1% in the fourth quarter compared with 2.7% growth in the third quarter. A high base effect from a year ago and weak output could impact growth in agriculture. Growth in industry is seen at 5.6% for the fourth quarter compared with 6.1% in the preceding 3 months, while growth in services is expected to remain steady at 7.6%. Many economists expect fourth quarter to be a low point and expect GDP growth to revive thereon. Chetan Ghate, a member of the RBI's Monetary Policy Committee, in its last meeting said that he expected the third and fourth quarters to be the kitchen sink quarters where the most adverse outcomes to the economy are realized. Lower than expected GDP numbers can also mean a larger rate cut in the second bi-monthly Monetary Policy Committee's meeting scheduled early in June.
Coal India has reported good set of numbers. If you look at the top line growth, we're looking at a 7.5% uptick there at a number of around 28,546 crore. This compares to the estimates of around 27,232 crore. Clearly a beat coming in on the top line front. Net profitability of the company stands at around 6,000 odd crore as compared to 1,300 crore that we've seen in the corresponding quarter. The EBITDA that we're looking at is around 8,212 crore as compared to the estimates of around 7,216 crore. Clear beat coming in even on the operational front of the company's margins. However, if you look at that, they look to be a little amplified, mainly on account of inclusion of gratuity in employee expenses in the base quarter. If you put that number off and if you look at just the adjusted EBITDA, excluding the overburden removal expenses and the adjustments thereof, it's a flat growth on operational front, 3.5% uptick rather at 10,419 crore, which compares to 10,062 crore that we've seen in the corresponding quarter, which is stripping off the adjustments and also the gratuity expenses. 2-3 things which go behind the making of good set of operational numbers. It's the employee expenses which have declined and also the lower contractual and repair expenses, which in turn have reflected into the financials of the company. If you look at the volume picture of the company, well, that's a decent show there itself. Total volumes that have risen by 2% for the company. FSA volumes have risen 13% and e-auction volumes, however, declined by 42%. But then this again is a little lower than what the street was estimating. We were estimating a number of around 22 MT for e-auction volumes. So there is a bit of disappointment creeping in on the e-auction volumes a bit. But if you look at the realization, they've been more or less in line with what the street or the brokerages were working with. FSA realization per ton has risen by 4.1% year-on-year basis, while that of e-auction realization, that stands higher by as of 30%.
Well, ONGC reported a weak set of numbers in the fourth quarter of financial year 2019, mainly due to higher costs. Now, if you see the revenues of the company, they were down by nearly 3% to close to 26,700 crore rupees, which is the biggest drop seen in the last 12 quarters. The net profit of the company, now that declined by nearly 51%. Close to 4,000 crore rupees, the biggest drop reported by the company in the last 13 quarters. EBITDA was lower by nearly 25%, while the margins contracted to nearly 46.2% in the fourth quarter of financial year 2019. Now, the realization numbers, they were lower at close to $61.93 per barrel versus $66 per barrel in the last quarter, and that was because of lower crude prices. On the operational side, if you see the crude sales, they were up by nearly 9%, while the gas sales were down nearly 2%. Now, higher cost impacted ONGC's financials in the fourth quarter. However, a very little part of this negative was offset by higher other income, lower finance cost and lower tax expense. Now, employee cost, exploration, well write-off cost, depreciation and other expenses were significantly higher compared to last quarter. Employee cost increased by nearly 16% to close to 783 crore rupees. Exploration well write-off cost was higher by nearly 36% to close to 3,600 crore rupees. Other expenses were higher by nearly 49% to close to 5,760 crore rupees. The statutory costs were also higher for the company by nearly 20% to close to 7,200 crore rupees. Now, the reason behind that was because of the higher increased royalty payments to the government in part of the joint ventures of the company. That's the reason the statutory cost of the company was higher. Now, other expenses rose on account of arbitration-related provisioning, higher repair and maintenance cost, higher CSR spend, and higher admin and regulated cost in the fourth quarter of financial year 2019. Now, And the exploration well write-off cost, now that was higher because of a change in guidelines of reserves, which led to higher write-offs in the fourth quarter. Now the other, on the positive side, if you see the other income, that was marginally higher at close to 2,250 crore rupees. The finance cost was down by nearly 8%, while the tax rate was lower at around 27.5% in the fourth quarter. However, this part could, on the balance sheet side, if you see the debt of the company, now that increased by nearly 54% to close to 21,600 crore rupees compared to what the company had reported its debt in the first half of financial year 2019. So that could be a kind of negative for the company because the company was reducing its debt going forward. Lastly, in FY19, the company had to bear no subsidy burden, which could be seen as a positive for the stock price today.
We're finally at the end of a long earnings season, but there are a number of results that we need to look at, starting with SAIL that posted a weak set of numbers. Their revenues were up 9% at 18,506 crores. Net profits were down 43% at 468 crores, mainly on account of higher raw material cost and lower realizations. And EBITDA was down 6% at 2,215 crores. Then we have Jain Irrigation, which also posted weak numbers. Their revenues are down 6% at 2,583 crores. Net profits are down 45% at 54 crores. EBITDA is down 33% at 249 crores. And margins stand at 9.6% versus 13.5% last year. The bottom line numbers and margins reduced because of higher other expenses and employee costs. IDBI Bank posted good results. Their net interest income is up 76% at 1,609 crores. Net loss is at 4,918 crores versus a net loss of 5,663 crores. The provisions stand at 7,233 crores versus 10,773 crores. And the GNPA stands at 27.4% versus 29.6% quarter on quarter, while the NNPA stands at 10% versus 14% quarter on quarter. Ujjivan Financial Services gave in steady numbers. The net interest income is up 18% at 320 crores. Net profits down 2% at 64 crores. Disbursement is up 68% at 3,728 crores. Their GNPA stands at 0.9% versus 1.4% quarter on quarter, and NNPA stands at 0.3%, flat quarter on quarter. Then we have NLC India, which put up a bad show. Their revenues were down 25% at 1,902 crores. Net profits down 67% at 290 crores. Mainly, so both their segments, lignite mining and power generation, didn't generate very good revenues. EBITDA is down 74% at 225 crores, and margins stand at 11.8% versus 34.5%. Net profit was also affected by higher finance costs and higher other expenses. Jet Airways says that it's not in a position to approve its financial results. This is in view of the ongoing bidding process undertaken by the domestic lenders for management change and resignation of the members of the board of directors, also to be blamed for the said action.
All right, thanks so much for that, Mishika. On to the ICC Cricket World Cup. Hosts England had it easy in the tournament opener against South Africa, winning by a comprehensive margin of 104 runs. Set a target of 312 runs for the victory at the Oval. The Proteas were bundled out for just 207, losing their last 8 wickets for only 80 runs. Ben Stokes was the man of the match, scoring a match-winning 89 and also picking up 2 wickets. Jofra Archer too was the other star performer for England, picking up 3 key wickets, including Faf du Plessis, breaking the back of the South African middle order. The second match of the tournament today will have the Windies take on Pakistan at Trent Bridge. Now, remember, Trent Bridge is a ground that is notorious for producing the highest score in ODI cricket. That's 481 runs. The big-hitting Windies batsmen will be in for a field day considering the short boundaries. The match starts at 3 p.m. Indian time. All right, well, that's a wrap on this edition of All You Need to Know. But remember, economy, politics, business, personal finance, and a lot more. You'll find everything on BloombergQuint.com. So do check it out.